gonna put it here. There was an envelope there.
You want me to just check with Janet where the envelope is? You better.
Yeah. Anyway. Can't check your Instagram, Facebook.
No, I'm not there.
Thanks.
So are we being taped, people? All right, so those coming from the, I'll call it the studio audience, greetings from Morristown, whoever is watching us from the big screen. So for those who didn't hear, we are having a guest speaker. It's not entirely clear. He's coming at 5 o'clock, 6 o'clock, 7 o'clock. So somewhere there, whenever he comes, we'll invite him in and we'll have him speak, and we'll theoretically take a break at 7, but let's see what time he comes, and we're gonna have to be nimble in terms of how we take our break and whatnot, so bearing that in mind. Let me just summarize what we did last class, the last few classes, what we're doing tonight, what we can expect next week. So, we have the introduction, we have chapter 1, which deals with sources of professional regulation. You guys are helping me big time. I was on the phone for 2.5 hours today as this expert witness, and I think I told you I'm participating where a client, a taxpayer, is suing his accountant because he had damages to the tune of close to $40 or $50 million. You know, it was a big number. And he's suing. And you know what? You want to know what I learned today is the defense of the accounting firm? The defense of the accounting firm is he should have known not to invest in the tax shelter, essentially blaming the taxpayer, which saying this case is being brought in California that it's a comparative negligence statute and that he was partially to blame. And they're using that as a way to mitigate or attempt to mitigate damages. The problem, and I'm going to see it through my glasses, with that argument is, how do you blame your client for participating in something that you said was bona fide? So I'm going to, over the next 2 weeks, I'm going to try to craft something. Let me see if I can get this up to snuff. If I can get it up to snuff in a way that I'm comfortable with it, maybe I'll share it with you, or at least share verbally where I'm going with this. But just want to let you know that this course has been very useful on many different levels about what standards are going to be applicable here and which aren't. I had to inform counsel. They were like, well, we got to apply Circular 230 to this whole thing. And I said, guys, you really can't hold the accounting firm to a Circular 230 standard, because Circular 230 in the aftermath of Loving and Ridgely, both of those cases make it pretty clear that Circular 230 does not pertain to tax advice, and the accounting firm also prepared this person's return. And they're like, well, no, we've had so many experts that said that Circular 230, I said, guys, you read the case, talk to me tomorrow, meaning, and this was, I've been on the phone with them all week. They read the cases, and all of a sudden they're like, you know, I can't believe no one else called this to our attention. This would have been embarrassing if we had done this. So, gotta know what standards apply is the bottom line. Anyway, moving on, last class, we spent some time talking about taxpayers and the liabilities they have. And again, I told you that in your practice, every single one of you should have a very good handle on what kind of exposure your clients have in terms of penalties. So, in a nutshell, Mike, you want to just tell us, you don't look happy with that. Do you have one or two penalties that you can say, and Gus, you have one or two, and Ping, if they each have one or two, maybe you'll have the remaining. So, Mike, one or two penalties that all taxpayers have to be aware of.
The filing late?
What?
Filing late,
Filing late, what's the penalty?
5% per month.
5% per month for filing late. Okay, what else?
Failing to pay.
Failing to pay, what's the penalty?
0.5%.
0.5%. Gus?
The accuracy related 20%.
Accuracy related penalty is 20%. Any other penalties, Gus?
Substantial understatement, 40%.
Well, if there's no, if your position there's no economic substance under Code Section 77010, you risk a 40% penalty, right? And then, Ping, do you want to tell us any other penalties that are lurking out there for taxpayers? Taxpayers.
Fraud.
Fraud, what's the penalty?
40%.
Is that right?
40 or 50%.
75%.
75%, right?
6663.
66, 63, right? So you got a fraud penalty. And remember, people are committing fraud. There's civil fraud and criminal fraud. And the distinction between the two ain't much. I mean, fraud is fraud, right? Just sometimes the government's not sure if it can prove it. Remember, if you're doing criminal fraud, what's the burden of proof, Marie?
Burden of proof for
Yes. What standard of proof does the government have to? Beyond a reasonable doubt, right? Guys, gotta watch more TV.
Right.
Or criminal CIS or whatever the shows are.
Right.
Beyond a reasonable doubt.
That's not subject to authority, right?
That's criminal.
Criminal.
So criminal, you have to be proven guilty beyond a reasonable doubt, right?
Right.
And if it's civil fraud, John, it just has, you have to meet more than 51% preponderance of the evidence, much lower threshold. Okay? So the government doesn't have to have as compelling a case. So, you know, that gives you a broad landscape of what kind of penalties taxpayers, right? Taxpayers, your clients, have to bear. And I think it's important because, again, anytime your client bears these penalties, as I can tell you firsthand, most of the time your client's going to come back and say, you should be the one bearing that penalty. So you should have a good handle on that, what it is. Okay, so we talked about tax payer penalties, and just keep in mind those are distinguishable. And just honing in on the accuracy-related penalty. The accuracy-related penalty, when does it apply? Because that's it, Brian. When does it apply? What code section were you referring to, Brian? 66, 62, right?
Yeah.
And what are the, Brian, some of the attributes of the accuracy-related penalty?
You need substantial authority to avoid the penalty.
Is that true, Trevor?
For
How does someone get nailed with the accuracy-related penalty? Nick, how do we get nailed?
Reasonable basis.
Well, what, you guys are describing standards, but before you get to the standards that have to be met,
Substantial understatement.
well, one attribute is there could be a substantial understatement, there could be negligence, there could be recklessness. These are things that are triggering points of 66, 62. And then you as an advocate for your client, your response to saying, because the IRS will assess the penalty, right? They'll propose an assessment with the penalty, and then you might respond, right, Brian? The penalty isn't applicable because, Brian, because, right, if it's a substantial understatement, you can say there's substantial authority, and if there's no substantial authority, Peter, you could argue what? Well, right, there's a reasonable basis and you made disclosure. Trevor?
I was gonna say reasonable cause and what's it called?
Reasonable cause, you're gonna have it under reasonable cause, because section 6664, you're gonna have to, in good faith, try to prove that you had, for example, reliance on a professional, and it was good faith reliance. Now, in the case of my client, who invested in a tax shelter, they said it was not good faith reliance because it was too good to be true. So they claimed he could not, and ultimately he did pay a penalty.
Well, the tax shelter, that's more likely than not, that's that.
Right, the tax shelter, the tax practitioner who's advocating, this is under 6694. When it comes to tax practitioners, right, the operative standard is found in Code Section 6694. And they are supposed to have three different standards. Again, make disclosure, substantial authority, or in the case of tax shelters, subscribe to the belief that it's more likely than not that it would prevail in court. Okay, 6694. All right, so we talked about the tax return preparers penalties, and we went through when they would apply. We talked about the fact that if a client rejects your advice on a return, what you should do. This is spelled out on page 71. Client rejects your advice. We talked about valuation and estimates. We talked about amended returns. Again, it's not should file a return. It's not that the taxpayer must file an amended return. They should file an amended return, correcting their mistakes. And then we talked towards the end of the last class about the Loving and Ridgely decisions and their impact on Circular 230 and how they greatly curtail the application of Circular 230. John was kind enough, if you recall from last class, to say that his firm has a questionnaire, and I asked permission because right at the very front of this it says, do not copy, all right? But I asked permission and I was told we could copy, or I could copy, and I could circulate it. So I had that in writing in the email, so I'm not gonna feel that badly. This is just, so let me just quickly go hand this out. And we said, most of you said that those who prepare tax returns in this class, and many of you do, that you have your clients fill out questionnaires, right? Nick, how long is your questionnaire? Have a look. This is double-sided, just to give you an idea. So, are there three there? All right, good. You got one extra? Mike, can you give it to me when she comes in? All right. Because there's some things that, you know, if you just say verbally, like the foreign activity on page 2, if you ask your client verbally and they say, no, I don't have any, and then you fill out the return and you don't fill out the FinCEN or the FBAR, and subsequently it comes to light they did have a foreign account, they can always say, oh, I told you about the foreign account, right? You didn't listen. Well, that's why people have these sort of questionnaires, right, that the clients are supposed to fill out. And that's really what's important. Anyone have experience with questionnaires that they want to share with the class about things that they've learned over the years, about things they've drawn to clients' attention, or things that, or clients, do they really take the time, effort, and energy to fill out these?
They ask us to do it.
They ask you to fill them out. What does that mean, they ask you? You mean,
Actually, when the client shows this form, right, so you don't understand, just you can ask the question and you will say yes or no, that's it.
all right, so they ask you, how do I say this? You go through the questions,
Yes.
you fill it out. Do you have them sign it or not?
Yes, at the end you can sign it.
Okay. Anyone else have any other experience that they want to share? Trevor?
Clients have bad handwriting.
Right, so you want to separate the yes and no by wide margins, because otherwise you're not sure what they're saying. And Ping, you were gonna say?
Yes, my software, which is they do have, questionnaire, and then when you prepare, they based on the last year, and then they kind of like summarize all of the key points. So even though I use this, checklist, I also have that one.
So what you're saying is that
Some software
the
provide.
software, based on last year's return, will prompt perhaps different questions, or
It's more like, what is summarized last year, your return, like, foreign account, how many, it kind of like, list, not a dollar amount, but it's the items.
Right.
It's like you have a Chase account, you have that one, so the list 5, 6 accounts. So client will be easier, but, oh yes, I do have those information based on the last year return.
right? All right. I mean, let's put it this way. Tax software companies are trying to put, part of their pitch is we can make you look smart in front of the client. So they're saying, and it's also an incentive for you not to change companies, because, so they're pretty savvy about what they want to do, and hopefully you do a better job as a result of the more targeted questions that they're supplying you with. Right? But danger is if you don't do these, and the client comes in with the proverbial shoebox, just fill out the return, and then something's missing, of course, again, it's your fault. All right, any questions? Here's our goal, guys. We're gonna finish chapter 2. I left off with one question just so we could keep our foot in chapter 2 momentarily. We will finish chapter 2. And I will progress and head into chapter 3. I have my cell phone on, and we will finish part of chapter 3. And hopefully Bob's turn comes, ideally, the later it gets, the more I'm hoping he comes towards 7 as opposed to 6, because then it gets a little bit awkward, but we'll survive if he comes at 6 too. All right. I don't even know if he knows he comes to the second floor. Any questions about the material? And towards the end of the class, if things fall into place, if I do my arithmetic correctly, this is our 4th class, correct? And what I'd like to do towards the end of the class is distribute the writing assignments to each of you, so that you guys have enough time over the next 2.5, 3 weeks to start putting together. One other question that reminds me, everyone has been able to get onto RIA? Have you toyed around with it, played around with it? My offer will remain outstanding the rest of this month, as long as you're part of the tax program. You go into RIA, but in particular the next several weeks, and you have any problem navigating it, I will get on simultaneously with you and see what you're doing, or try to replicate what you're doing, and try to help you if you're getting lost, or you can't figure out, or if you need need some tips on how to pull out, so it's a.
He sent it a summarized, whole program, how to do it, he sent it.
He sent you a summary,
Yeah,
okay?
yes,
So
I think everybody he sent it.
Okay, so apparently, did John send you a summary of memory?
Yes, he sent it on.
I never received it.
Yeah,
Did other people get it? That's my question. John, what's his last name? It begins with a Z, I believe.
I'm not sure, it's in my email, I can show it to you.
Okay, during the break, if you don't mind, let's just see what it looks like, but,
He sent a summary, how to do it, how you want to search, everything he sent.
okay, great. So, if you don't mind, Viva,
Yes.
if anyone didn't get it, or you can't find it, Viva will tell you when it was sent, and then she can also forward it to you pretty easily, right? So, all right, so bearing that in mind again, guys, that's a great resource, make good use of it. Problem 2-21, I believe that's the one problem we didn't cover towards the end of chapter 2, right? We have Raquel, a CPA, has provided a more likely than not opinion to several clients who invested in transactions the IRS has challenged in exam. The opinions appear to be based on questionable factual and legal assumptions, including assumptions as to future events, and to rely on representations made to Rachel by her clients, including financial forecasts and appraisals. The opinions do not appear to consider all relevant facts and circumstances. Rachel prepares her client's returns, which contain positions consistent with her written opinions. Does OPR have authority to investigate and ultimately discipline Raquel for violating Circular 230, Section 10.34? So if you want, just open Section 10.34 just to remind yourselves what it looks like, okay? 10.34. It's on page 340 of your text. So, would this violate Circular 230, Section 10.34, with respect to the tax return? And if you look at question B here, does OPR have the authority to investigate and ultimately discipline Raquel for violating 10.37? Okay, the 10.34 deals with tax returns. 10.37 deals with written advice. If you look at 10.37 A2, it deals with the practitioner must, based on written advice on reasonable factual and legal assumptions, reasonably consider all relevant facts and circumstances. Use reasonable efforts to identify and ascertain facts relevant to the written advice of each federal matter. Goes on from there. What is the author's point in raising this? Obviously, Raquel is advising, it seems to me, people based on questionable tax shelters, right? Has provided more likely than not opinions. Can she do so, or does she risk disciplinary actions from the OPR? John, you were going to say? Hey, when you render legal advice, is that representation before the Treasury Department, right? You recall from Section 330, the enabling statute that is the genesis behind Circular 230, that the Office of Professional Responsibility is supposed to only discipline those people who are practicing before the Treasury Department? Well, we learned in the Ridgely and Loving case, this is not truly practiced before the IRS. So maybe as delinquent as she is, and she may, emphasis on the word may, ultimately suffer a penalty under 6694. She may theoretically, the AICPA or the state licensing board may take issue with her, right? So remember, the fact that Circular 230 doesn't apply doesn't mean that the Internal Revenue Code doesn't apply, right? 6694. And it doesn't mean that we know that if you look at Appendix C, Appendix C deals with the statement on standards for tax services, right? Statements on standards for tax services. These are standards you're supposed to adhere to when preparing returns, and this may fall short of the mark. Truth be told, many, the AICPA or the state licensing board may have bigger fish to fry, meaning they may have CPAs who commit outright fraud or steal from their clients, and those are gonna be the first people targeted. So they may not go, they may figure, hey, this will take care of itself, meaning if these people, like Raquel, do poor jobs, they'll just be sued for malpractice, and that will be enforcement enough. So I'm just pointing out, this 6694 may perp this behavior, and theoretically, but maybe not as practical, the AICPA or the state licensing board may address this. Page 98. As questions for thought, let's just run through some of these questions the authors leave us with in chapter 2, when we're dealing with tax return preparation advice. But there are good reasons to subject different groups of tax practitioners to different sets of regulatory rules with regard to preparation of tax returns. For example, the attorney-client privilege and the lawyer's role as advocate may call for special regulatory rules for lawyers engaged in tax practice in some contexts, but is return preparation such a context? So it's just raising, when attorneys practice, are they subject, are they engaged in the practice of law? Are they engaged in tax return preparation, which is a separate sphere? If they're engaged in the practice of law, right, certain rules come into play. In particular, we're going to see attorney-client privilege. But if they're not truly practicing law, then attorney-client privilege does not apply. And I was just going to give you a little bit of a harbinger of things to come. Is tax return preparation considered the practice of law, guys? No, it is not. You're going to see that.
How hard is it for a prosecutor to kind of get around that situation where it's an excuse versus something that's your attorney and your CPA? Where does the attorney get to kind of put up the wall and say, you can't have this, you can't have this?
So John's saying that when do attorneys get to invoke the attorney-client privilege? And it really has to deal with it being truly a legal matter. And two, the second factor, does the client have a legitimate expectation of privacy? If the client has no true expectation of privacy, it's very hard to invoke the attorney-client privilege. And you're going to see when it comes to accountants, can accountants safeguard information under something similar to the attorney-client privilege? John, you're shaking your head. Anyone say it differently? Can an accountant, as a CPA, can you safeguard information under client confidentiality? And what you'll see is there's a code section, 7525, code section 7525, which we're going to learn about, which enables, it's a relatively new, not that new, but relatively new, code sections that allow, aside from criminal matters, that accountants can invoke attorney-client privilege, okay, aside from criminal matters.
So if you're being sued, you're protected,
When you say being sued,
in like a civil matter. So,
by whom?
you're, get somebody to the car and trying to get your tax returns to see what you're.
Well, tax returns are not generally covered by the attorney-client privilege, but if you are rendering tax advice, okay, and tax advice has an aroma of legal issues, you can say, look, I do not have to release that information under, Code Section 7525. Or, you're rendering tax advice and, the IRS wants access to your opinion letter. You can say, no, this was under, the auspices of attorney-client privilege. Code Section 7525.
What is it for accountants?
For accountants, specifically for accountants. Because accountants generally don't have attorney-client privilege. And rightfully so, accountants were complaining to Congress and said, hey, this is giving lawyers an unfair advantage because who are you gonna hire? Someone who has a confidentiality privilege or someone who doesn't? The general public. So the AICPA lobbied hard to get Code Section 7525 in place. So that your clients, if your clients say, you know, I'm gonna use someone else to do this because I'm afraid this could get in the hands of the IRS, you can say, no, no, no. Code Section 7525 will protect us. What reforms would improve overall regulation of this area? Should the code ethical rules applicable to lawyers and the CPAs in Circular 230 more clearly reflect the non-adversarial nature of return preparation? Well, this is a hard question to answer, and I don't know if you guys share my view. And there's no right answer here, by the way, with a capital R, capital W of right or wrong. What reforms would improve overall regulation? Yeah, I personally am in the mindset that Congress should regulate tax return preparers. I think that would be good for the country. I think it would be good for people in this room. I think it would be good for the accounting world in general. There's just too many shysters out there, and that harms the country, harms the accounting profession, and harms the general public. Any opinions?
What's the appetite for?
What's the appetite? I mean, unfortunately, I don't see anything happening in the current Congress at all, because right now, and I'm not saying this in a political fashion, the Republicans have the notions, rightfully or wrongfully, that small business would be harmed by this, because you would put a lot of the people who practice out of their garage out of business.
Less regulation in general.
Right. But this comes at quite a price tag to the country. So no appetite right now. At some point, my 2 cents, the deficit's gonna become so overwhelming that something's gotta give. It's unsustainable. What are the best arguments for and against for requiring the filing of amended returns? We talked about this, that it might be a good idea to make to require the filing of amended returns, but that comes at the price tag that if clients know that you learn that they must file an amended return, they may sweep things under the rug because they're fearful that you otherwise would have to withdraw your representation once you learned that there was a mistake, and if they were willing to correct the mistake. Right now, you can ignore that, right? And you can still do Ping can still use her software to do the new tax return, assuming she's not perpetuating an old error. But if there was a requirement that she had to, or the client had to file an amended return, and Ping pointed out you owe an extra $20,000, client said, you know what, I shouldn't have told you. Well, now it's too late, and once Ping knows that, she would be required to withdraw her representation. So there's a pro and a con there. Should the regulations under 6662 and by reference under 6694 be amended to reflect a more realistic view of relevant authorities to consider in applying the substantial authority and other accuracy-related standards? Why or why not? And what the authors are alluding to, and they did this in the book, in the textbook, is that right now many people would argue that the go-to example is, hey, if you have a treatise, a well-respected treatise, directly on point, boy, well-respected treatises should be honored. That they should be looked up upon and given deference. And what's the counter argument to that? Why would you say that doesn't work? Why not allow treatises as substantial authority?
They're not vetted by the IRS, or any other government authority that enforces it.
Now, look, there are some brilliant people out there who have crafted treatises, and the one that many of you maybe have used, and by the way, your RIA gets you access to, is Bicker and Eustace, okay? Two superstars in the corporate area. Professor Bicker taught many, many years at Yale. Professor Eustace taught many years at NYU. Both are no longer, but their treatise lives on. The problem is, Jim Eustace, for example, used to be an expert witness in a lot of court cases. And I mean, it's humans, right? And if Jim Eustace was arguing a case, and in his supplementary part, he could always skew his treatise in a way that was more favorable, right, to his clients. Okay, because these cases, guys, how long did they take to unfold? Years. I mean, I've been an expert witness in cases where they call me up day one or months into it, and then 3 years later calling me back, right? Plenty of time for someone to write a new angle to their treatise or whatnot. So the point is, substantial authority, I get it, why some people have always argued that articles or treatises should be part, but those can be more readily skewed than the other sources of authority, right? So, anyway, don't look to have that happen anytime soon. I don't think we're gonna see change there. Chapter 3. Any questions on Chapter 2? Everyone, for exam purposes, for purposes of writing this short paper, everyone can get this bifurcation in their minds between taxpayer penalties versus tax return prepared.